Good evening, everyone. Welcome to Closing Comments here on December 18th. Let's jump right into these charts and see what happened in the markets today. First up, we got our February live cattle on the board. We did see this market with a nice little breakdown here today. Offers coming in this morning below our prior day's low, getting the ball rolling lower early. We did see this market hit off that opening range, sending all the way down here towards 227, which was our prior week's point of control. Target number 1 was hit there in the first half hour of the day. Throughout the rest of the day, we did see this thing just kind of chop up here between 227 and 229. Nice finish here by the bulls, rallying back up off of those lows, finishing the day just above 228.5. Nice long wick down here, showing support above that 50-day moving average, looking like the buyers are stepping in and already offering some support there like we expected at that point of control at 227. We could see a little bit of downside here early tomorrow if this thing does continue below our prior day's low and try and pick up some more buyers down here closer to 225. That'd be a welcome sign, and buyers would be good to have a chance at some of these lower prices. However, this pushback we saw here late and that nice long wick we saw on this daily candle here, looking like the bulls could be stepping in sooner than later. If the bulls are able to rally above today's high at 229.67, bids above that point tomorrow morning should get this market rolling back to the upside once again and kick this uptrend into gear and head higher here into year end. So bids above today's high should get us back up towards that gap and keep this market moving higher. But if we do continue to flush back down here a little bit, look for more support to come in here down near 225 to 227. We want to see this thing continue to balance out and show good buyer support at these moving averages. And we should see this thing continue to be a good dip buying opportunity for this cattle market to turn higher into year end and start of 2026. March feeders up now. Same story. Nice early breakdown below our prior day's low. A lot of inventory getting built up over the last few days up here that gave way. This market settling all the way back down here towards these prior week lows as well. Didn't quite hit that point of control, but we got close. Most of the day's downside coming in that first half hour of the day off that opening range. Once again, we did see more choppy action here, back up towards 333 to 335 throughout the remainder of the day. Nice long wick showing good rejection of these lower prices. Buyers stepping in and offering good buyer support down here. We could see this thing continue to push back down into these averages and try and find some support from these lower prices and that prior week's value area. But with this nice projection we saw here into the close, could have the bulls rolling early tomorrow and try and close this week on a high note. Look for them to get some bids above today's high at 337.10 to get this market rolling higher. Above today's high should have us heading back up here towards 339.17, and above that pivot should have us heading up there towards 345 and beyond and get this uptrend rocking and rolling into year end. Look for this cattle market to maybe try and find a little bit more support and buyers down below, but at the moment we're seeing good pushback from the bulls, and we should see this cattle market start to turn higher and keep this uptrend rolling. March corn futures on the board. Prices continuing to snap back into that range today. We did see more upside here coming in above those prior day highs, rallying above 440 and right back into the middle of this range. At the moment, this market still remains pretty comfortable. We're going to have to expand the edges of this range a little bit, somewhere from about 435 to 455 is going to be a more appropriate range levels here to watch. Continue to cut this market into thirds, buy the bottom end, sell the top end. This thing is going to keep chopping up sideways here in the near term until we can get a break beyond either 435 or 455 going forward. So look for this market to keep on chopping up and offering good range conditions. Crude oil prices, seeing some more downside here today. We did see a little bit of a rally coming in yesterday, pulling back up there towards 57. However, we weren't able to get above these prior day highs and not able to get back above that bear pivot. Sellers still in control here, keeping this market compressed down here below 57, pushing back down towards the $56 mark once again here into the close. As long as we're trading below 57, look for a nice slow bleed to continue down there into the 50s. But if we do get a relief rally above these prior 3-day highs here, we could see this thing snap back up into these major moving averages, climb back up here towards $59.60, and see if we can try and pick up some more sellers for another leg lower. In the meantime, expect the bears to keep on grinding this market down. And last but not least, equity indexes with a nice little rally here today. We did see that rally sell off here into the close, a little bit of weakness late, but we did see a nice little snapback rally today. Still trading below our 50-day moving average here on the S&P. NASDAQ also still trading with the high of the day, just bouncing off the bottom end of that. as long as we're trading below that 50-day moving averages, and that 50-day moving average, and until we get a follow-through day here, there's no real sign to get overly aggressive. There's still some spots in this market that offer some good relative strength names, but in the meantime, as far as the indexes go, they got a little bit more to clean up here. Encourage everyone to remain defensive here until the charts are a little bit cleaner and we have more good buying support. In the meantime, I encourage everyone to stay a little defensive here. Stay invested in those areas that are still working. Certain sectors and names are acting right and continuing with some good upside, but we still are being weighed on by this tech and semiconductor sector, keeping a weight on things and keeping the S&P and the Nasdaq from moving out. Dow stocks, once again, just sitting right here on top of this 20-day moving average, still showing good support here, not breaking down below that 50, still holding this follow-through day low as well, so this market still remains in uptrend territory, so stick to the relative strength names in the Dow stocks, but tech and semiconductors still putting a weight on things, and encourage anyone to still be defensive here if we're playing with the S&P or the Nasdaq, as there still could be a little bit of downside or volatility to come from here. Encourage everyone to remain defensive and let this thing clean itself up before we commit to any new long positions. That's all we got for tonight and for the week. Thank you everyone for tuning in. We'll be catching you this weekend for our Week 51 Market Watch. Thank you.